What if I told you that the $410 trillion traditional banking industry as we know it today will be completely replaced by a $250 billion industry within the next 5 years? And what if I told you that most people have no idea that this shift is happening right under their noses? I'm talking about the move from traditional banks that pay you 0.5% interest as a maximum to a new financial system where you can earn 60 to 80% per year on the same money. Guys, the numbers do not lie. In traditional banks, there's about $410 trillion globally. However, that same exact money is earning anywhere from 0.01% all the way up to a maximum of 2.5% if you have above $1 million in deposits and a very strong relationship with the bank. In other words, you're getting paid basically nothing by just holding your money in the banks. So you invest it and you get maybe 5 to 10% per year, maybe on the high end like 15% per year if you take a ton of risk in the traditional financial industry. However, there's a new $250 billion industry that's consistently growing year over year. And for context, this is a sub-industry of the $3.9 trillion cryptocurrency industry. So it's already piggybacking off of the growth that's within crypto. And we'll dive a little bit deeper into what this is later on, but it's essentially the shift from keeping cash under your mattress to putting it in investment accounts. So while banks are giving you 0.5%, this system will pay you 60 to 80% annually. A portion of that $410 trillion, along with the $3.9 trillion in the crypto industry, is flowing from being dead money in the banking system or just holding crypto to being working money in this industry known as decentralized finance. And you can actually become the bank instead of the customer of the bank. Instead of the bank making money off of your deposits, you make the money because you own the money. And at all times, that money is in your custody. And that's the beauty of the decentralization aspect of this industry. Nobody is in charge. So I'm going to show you exactly how this works and how to set it up step by step, plus why getting in early could change your financial life forever. Let's dive in. Now, the great financial shift is happening, and I want to talk about why this shift is inevitable. In the traditional banking industry, that $410 trillion industry, they're levered up to their eyeballs, right? They essentially take your money. So say you deposit $100, right? They keep $10 and they loan out $90 to people that want to borrow money, whether it's for mortgages, whether it's for just personal loans, whether it's through business loans, right? And they're charging high rates for those. We're talking 15 to 20% per year. You don't get 15 to 20% per year. You get 0.01% as we just took a look at. They give you practically nothing, even though it is your money. And then of course, once they loan that out, that hits the banks, they keep a 10% reserve, they loan that money out again, and it just consistently repeats the process. And then in the crypto industry, this is a $3.9 trillion industry, but the thing is, most people are just holding their coins and tokens, right? They have Bitcoin stashed away, they have Ethereum stashed away. Maybe they're staking on a centralized exchange or using earn products on centralized exchanges, but they're still getting paid next to nothing and well under 10% per year. So as I said earlier, in this new system that currently has $250 billion in it, so marginal but not small, you can become the bank and keep all the profit. You can be the one that chooses to lend out your assets or lend out your dollars. You can be the one that chooses what to invest into and what your money is invested into. But more importantly, you can be the one that keeps all the profit. And the way I like to relate this back to the overall crypto industry is just like how the internet didn't replace computers. It made them infinitely more useful, right? That's exactly what DeFi is going to do. DeFi's total addressable market is capped at how much the crypto market is worth. Because at the end of the day, there are always going to be people that are just holding crypto, not doing anything with it. DeFi increases the use case behind crypto. It allows you to invest into structured financial products that ultimately you have custody of and you have control of, but more importantly, you get the returns for. And just to put it in perspective, when we compare the 24-hour volume of the crypto market compared to its overall market cap, you get a ratio of about 3.9%, meaning that the daily trading volume is about 3.9% of the overall market cap. Pretty solid, a lot better than the traditional financial industry. But when we look specifically at decentralized finance, $14.5 billion divided by $250 billion gives us 5.95%, meaning that there is significantly more trading activity happening here. That is, of course, compared to the overall money in this industry, do keep in mind. But more activity per dollar means there are more money-making opportunities out there. Money flows to where it can work the hardest, and where it can work the hardest is in the DeFi industry because it can earn the highest returns without taking unwarranted risk. And to be honest, I probably don't even need to show you this, but in the traditional banking industry, $50,000 is earning $5 per year. If you're on the high end, you're earning about $12.50 per year. Let's just say you have a locked-in CD from a couple years ago that's going to expire relatively soon, right? You're still only earning $2,500 per year off of your $50,000. But when you bring that money over to the DeFi industry, you are earning $30,000 per year on the low end with the potential to ramp up. So in this $250 billion DeFi industry, you become the bank, the broker, and the exchange. You are the one in charge, but you are also the customer at the same exact time. That's the beauty of decentralization, right? It doesn't rely on a single person or a single company. Anybody can invest into DeFi. Anybody can create a DeFi product as well. What I do is I invest into DeFi. So when we look down in DeFi, there are all these different types of DeFi products, also known as decentralized applications out there. There's Aave with $40 billion. There's Lido with $37 billion. There's Eigenlayer with $19 billion. And I can go on and on and on. The other thing is you have top players in the crypto industry playing in DeFi, like Binance with a $14.1 billion product. Coinbase, maybe you've heard of their Base chain. That currently has $5.2 billion in it. And there is a plethora of other decentralized products for centralized exchanges. But think of these like your financial products in the traditional industry. Some may be banks, some may be exchanges, some may be brokers, some may be vaults where they do everything for you, right? But ultimately, the money never leaves your custody. And at the same time, you don't have to go and complete a bunch of KYC information. You don't have to say, hey, I'm an accredited investor, right? You could just simply go over to their website, connect your DeFi wallet, and start interacting with these markets and platforms. You can see that I currently have $75,000 over on Aave. And if I wanted to take out a loan against that $75,000, which I already have a $28,000 loan here, which is being used for leverage, I can simply just borrow this right over here, 2,000 USDC, click this button, and then all of a sudden there is 2,000 USDC in my DeFi wallet. And USDC is always equal to $1. If I want to add collateral, I just simply go over here, supply. All of a sudden, there is ETH collateral over here on my wallet. There's no monthly payments here. It's 6.3% per year right now to borrow against your assets. And whenever I want to repay, I just go over here to repay. And the thing is, my debt just increases over time at a 6.37% APY. Simple as that. So in this instance, instead of the bank being the one that makes money off of your assets that are being lent and you don't even know your assets are being lent and they pay you a very marginal share of that, right? You can earn all that money. Like on USDT right here, we can earn 4.5%, and this is one of the simplest strategies out there. On USDC, we can earn near 5% right now. There's also decentralized exchanges, one of them being Uniswap with a $5.8 billion TVL. So this would be the equivalent of going over to a brokerage or a stock exchange or something like that. Except if we want to trade, let's just say some Ethereum for USDC, we just simply say, hey, we want to trade this much Ethereum. It tells us how much we're going to get out of it, and then we can simply trade. But the thing is, we can also be the one that facilitates that trade. Like over here, for example, I have this serve an Ethereum position where I have earned $188 in fees over the past couple days just off of an $8,000 deposit. And when we look at the projections for this position, it is earning me $37 per day, $265 a week, $1,100 a month, and over the course of a year, it's earning me $13,000, nearly $14,000. Now, this is a higher risk opportunity, so it's higher than the average 60 to 80% APRs. But providing liquidity, interacting with these decentralized exchanges is the equivalent of, instead of just owning, say, Apple stock, you become the stock exchange that Apple trades on, but you also have all the upside to Apple stock, along with all the trading fees that generated from people trading Apple stock. You see, in traditional crypto, you just buy Bitcoin, hope that it goes up, right? And that's what the majority of these people in this $3.9 trillion industry are doing, right? That's where the majority of the money is. And that's okay, right? Because not everybody wants to earn income on their assets. But in DeFi, you take that Bitcoin or Ethereum or those other assets and you earn income on it while you wait for the prices to go up. That way, you get the price appreciation plus the income generation, right? So it's like owning rental properties that also go up in value. It's nothing new, it's just a different industry. But the thing is, there's a huge education gap here. You don't know what you don't know at the end of the day. Traditional finance kept these strategies for institutions only for the longest time, right? When you go over to Robinhood, you can't just say, hey, I want to be part of a liquidity pool, or you can't just say, hey, I want to be one of the people that facilitates trades there. It's invite only. You need to have tens of millions of dollars, hundreds of millions of dollars sometime, right? The infrastructure, though, in DeFi is finally mature enough for regular people. So it's like the internet in 1995. There's huge opportunity. Most people just do not see it yet, right? The concept has been proven. It's gone all the way up to $230 billion and all the way down to $65 billion in a short period of time. But what you've noticed this time around, ever since 2022, is its slow and steady growth. And now we're sitting at a $250 billion TVL, which represents total money in here, not market cap. TVL represents every single dollar in this industry. Now, before I show you the step-by-step setup process, I need to share something crucial with you. What I'm about to show you is just the basic setup, how to get started and how to deploy your first positions. But the real magic happens after deployment, how to optimize your returns, manage risk like a professional, and scale this into serious wealth. So I've created another YouTube video that dives into the advanced strategies. It's called the 5 best DeFi strategies to build wealth in 2025. This video shows you the professional level tactics that separate people from earning 20% per year to earning 80% per year with the same exact setup. It's going to be linked at the top of the description as well as at the end of this video. So after you're done watching this one, go ahead and take a look at that one if you want to learn a little bit more. Now, we need to understand the 3 main ways of earning income in DeFi, right? Number 1 is lending, which is essentially becoming the bank and earning interest. You're going to earn maybe up to 10% annually on this, right? Number 2 is liquidity pools, where you're going to earn maybe 40 to 80% annually depending on risk tolerance. Yes, there are some pools that do well over 100%, just like that one that I showed you, but those ones are risky and you have to be patient with those ones and you have to believe in the underlying assets. But you're basically becoming the exchange and earning the fees from people trading because people are always going to be paying fees. Now, the beauty is these fees are significantly lower than centralized exchanges. So there's a use case for people to come to DeFi. Lower fees. There's also staking, which I kind of just like to bundle under HODLs. You're earning maybe 2 to 3% per year, depending on what you're staking, but you're helping secure networks and you're getting paid. To get started, you need to get the right wallet. As a starting point, just for Ethereum network, we recommend Rabby wallet, RABBY. And on top of that, we recommend you purchase a ledger. A ledger is going to be a cold wallet. It's going to be a physical device, a hardware wallet, just like this one, which ultimately means that you always have to sign off on this wallet before a transaction is executed. But to connect a ledger wallet to DeFi is relatively not user-friendly, I guess you could say. It's really annoying to do so. So that's where we install Rabby, which is less secure when we use it on its own, but when we connect Ledger to it, it gives us all the convenience of using a browser wallet like Rabby, which is a replacement for MetaMask or Coinbase wallet or Trust wallet, right? But we have all the security of a ledger, so we get best of both worlds. The thing about having a DeFi wallet is like having your own bank account instead of using someone else's, right? And what I mean by that is you truly have custody of your own capital. Your money, your control. You're going to want to start with stablecoins. So if I were to give you one piece of advice here, go over to Coinbase, buy USDC, not any other stablecoin, USDC with ACH transfer on your bank account. You will pay $0 in fees. For example, if I buy $35,000 of stablecoin, you could see I'm getting 35,000 USDC. And when I go to sell it with Coinbase, same exact thing. I give them 35,000 USDC, they give me $35,000. No spread, as well as no fees. We can transfer that crypto to our DeFi wallet by using our DeFi wallet address. For example, if we just grab that address from Rabby, we copy it, then we go to send crypto, we paste it in, and then we send that USDC there. Always do a $10 test deposit first, make sure that hits, and then do the remainder. Now, USDC is like digital dollars, right? And as I mentioned, you can earn 5% pretty easily on USDC and be completely liquid, way better than what you could get in the banking system. But we can eventually go over to Matcha, where we can swap that USDC for crypto assets like Ethereum. So if I were to swap $35,000 of USDC BTC right now for Ethereum, you will see that I get $34,970 of Ethereum out. I pay $30 in fees on a $35,000 trade. Let's take a look what would happen if I were to just swap in $35,000 into Ethereum on Coinbase on a centralized exchange. Look at that. I get 7.921 Ethereum, which includes a $644 fee, along with the 1% spread that is hidden, right? So you compare 7.921 to 8.146, you're getting significantly more out of your trade, which helps your ROI in your investments. And then after you have that Ethereum, you can go over to platforms like Aave, connect your DeFi wallet, and supply these assets just like that. Now, this is from a very, very high level, but if you guys are looking to dive a little bit deeper, watch the video that I'm going to put on screen right now, along with drop a like, subscribe and notifications turned on, and let me know where you get stuck down below in the comment section, because I'd be happy to make some content around it. I hope you guys enjoyed today's video. If you did, I will see you guys in the next one. Peace out.